Welcome to the Roy Morgan Weekly Update. The Reserve Bank's decision to cut interest rates today will be welcomed by many, and perhaps unsurprising, as real unemployment increased to over 10% in January, representing more than 1.6 million Australians. The decision to cut interest rates will be a boon for Australians dealing with high housing costs, including those under mortgage stress. And the expectation is clearly that there will be more interest rate cuts to come throughout this year. This week's Roy Morgan poll shows no change on a two-party preferred basis, with the Coalition on 51.5%, maintaining a narrow lead over the ALP on 48.5%. If a federal election were held now, the result would be a hung parliament, and either the Coalition or ALP would require the support of minor parties and independents to form a government, although the Coalition would be favoured. Government confidence, whether people think the country's going in the right or wrong direction, improved 6.5 points to 80, but still well below the neutral level of 100. A majority, 52.5% of Australians, still say the country's going in the wrong direction. Only 32.5% say the country's heading in the right direction. ANZ Roy Morgan consumer confidence was down marginally for a second straight week by 1.6 points to 85.1. Now, interviewing for consumer confidence and voting intention was fully completed before today's decision by the Reserve Bank to lower interest rates for the first time since the pandemic and after the recent bout of high inflation. In the past, the ANZ Roy Morgan Consumer Confidence Index has responded very quickly and very positively to interest rate cuts, with sustained increases in the index following previous interest rate cuts over the last 50 years. The Reserve Bank's decision to lower interest rates today is likely to provide a significant boost to consumer confidence, while the Albanese government will point to the cut as proof of their economic management credentials. We'll watch closely both consumer confidence and voting intention over the next few weeks to gauge the impact of today's decision as we head towards the federal election. Inflation expectations, which were also fully interviewed before today's Reserve Bank decision, increased this week, up 0.2% to 4.9%. So Australians are now expecting annual inflation to be 4.9% over each of the next 2 years. The increase indicates that consumers remain concerned about the possibility of inflation, even though other indicators, like the ABS Consumer Price Index, show inflation in the economy reducing. Now to employment and unemployment, the measure that really matters, especially to those who are unemployed. Real unemployment in January is 10.1%, up 0.4% on just a month ago. So an estimated 1.62 million Australians are unemployed. The increase in unemployment in January was driven by more people looking both for full-time jobs, that's up 42,000 to 783,000 people looking for full-time jobs, and part-time jobs, that was up 36,000 to 837,000 people looking for part-time jobs. And this represents the highest number of unemployed for 18 months since August 2023. There are an even higher number of Australians underemployed, that's working part-time but wanting more hours. Now, 1.81 million Australians are underemployed, the equivalent of 11.3% of the workforce in January, and up 0.7% on a month ago. This is a record high number of unemployed Australians. Overall, total unemployment and underemployment, what we might call workforce underutilisation, was 21.4% of the workforce in January. More than 3.4 million people, or over 1 in 5 people in the workforce. This is the highest rate of workforce underutilisation for 4 years since January 2021, during the middle of the pandemic. The biggest driver of the employment markets over the last 2 to 3 years has been the unprecedented population growth. Since the 2022 federal election, the population and workforce have both increased by over 1.6 million, while employment has increased by over 1.2 million. As you can see, there's a gap of about 400,000 people who've joined the workforce but not found employment, contributing to a significant increase in unemployment. So how are these interest rate issues playing out in the banking marketplace? Well, new financial data from Roy Morgan's single source program shows about 667,000 Australians have switched their main financial institution, their MFI, in the last year. And that's mostly because of poor interest rates, bad service and high fees and charges. Macquarie and the newer digital banks like ANZ Plus, ME Bank, UBank and Up have been the main beneficiaries of main financial institution switching in the last 12 months. Macquarie gained 48,000 customers and lost only 5,000 customers who consider them as their main financial institution, for a net gain of 43,000, while the newer digital banks gained 60,000 and lost 29,000, for a net gain of 31,000. The big four banks and ING saw little change, with gains and losses about equal. Regional banks lost an estimated 21,000 main financial institution customers through switching, gaining 79,000 while losing 100,000. Thanks for your interest this week in Roy Morgan's latest results, and I'll be back next week to bring you the early reactions to the Reserve Bank's decision to cut interest rates today and how that's impacted on consumer confidence, inflation expectations and voting intentions. Thanks for listening.